Good morning, guys. How are we all doing? So Dan from Trading with Dan here. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, and we shall go straight over to those Bitcoin charts. So yeah, Bitcoin on the 4-hour, not the picture of health. Where we are now, obviously, we fully and formally lost this $47,000 to $46,000 level. Looking to make our way low. We have got these horizontals down here. Basically, we call this 44,000, and if we did move this down a little bit to about there, I mean, we could actually look at this as a bit of a zone. Which is, incidentally, we have probably the upper level, the lower level, the mid level, and then the mid lower level. And then you could probably look at this as around the mid upper level. So we have basically got this lower quartile, which we are currently trading above at the moment. Let me just see if I can quickly change the thickness of that. But why did that not work? Oh. It must be, I don't know. Anyway, so yeah, so we kind of got this little zone here. Yeah, and if we lose that, then we'll be coming down to test the 42,000. But I mean, there isn't any real reason why we can't bounce here, trade sideways a bit, even trade up as much as realistically as much as towards 48,000 before then coming back down and trading downside. That's some downside. If we do get into this $48,000 to $50,000 range, we will have a good shot of breaking this downtrend, and yeah, coming to tap the top of the range. Not necessarily saying we will blast straight through on the first occasion, maybe get rejected, and yeah, like I've been saying, maybe we just bounce around for the next few weeks, maybe even the next month, within this $42,000 to $53,000 level. So yeah, obviously we are on the weaker side. We are down towards the lower end. It isn't going to look good if we do lose this 44,000. But I mean, yeah, I mean, in the context of the larger trend, this market was clearly, if we just look back to price action down here, was looking very bad. As we were testing the lower ends, and then it pulled through. I mean, yeah, I do suspect we trade sideways. We do have times where basically the market tries to, the evil market manipulators try and fudge you out of your positions before ultimately we do then make a move to the upside, upwards and onwards to 100,000. Remember, for the big players, these markets are relatively illiquid, so they've got to pull all sorts of shenanigans to get their fills, and also because the markets are relatively illiquid, it is easier for them to pull their shenanigans. So things also not looking too good for Ethereum Satoshi pairing here as well, as you can see. Pretty much at an important level. If you were to draw a horizontal in here, pretty important level, which we are trying to hold. But obviously it's not the picture of health, and yeah, quite realistically we could lose this level, but like I said, if Bitcoin does kind of start to recover from here, start to look less bearish in this shorter term, start to get back above, especially call it like 47,000 ish, then I think Ethereum could start to recover. But yeah, at the moment, obviously, it is gunning for a lower low relative to obviously this high and this lower high. Bitcoin dominance not looking as bad though. Not looking as bad, still under this support resistance zone now. Old support, new resistance. Gold, but gold struggling. Gold coming down here into its support level. The DXY, which we were looking at as potentially coming back down, is trying to mount a bit of a recovery here, obviously getting supported by the support zone, which is to be expected. So yeah, I mean, again, when we were coming down, it was looking like, yes, we can keep coming down, but now there was a bit of a risk to the upside. All right, if we do look at stocks, there we go. Stocks not looking particularly good here. Basically, what we've got going on is the Fed wants to talk about tapering. It doesn't want the bond market to go crazy. As in basically start to sell off. And we have so basically they're just trying to talk. They're trying to talk a mean talk, but realistically they can't really do a mean walk. they're gonna talk about tapering. They may even, when they talk about tapering, they're just gonna do less buying of bonds, less buying. So they're still gonna be buying bonds. They're still gonna be expanding the balance sheet. So what is the end game for all this is that if they do that and keep doing that, then the market will have a taper tantrum. It'll probably come down about 15%, and then the Fed will then have to, in a hurry, start all its programs again. Or just not start its programs. It won't stop them. It will just decrease them, but have to then increase them again to pump the market again. But the problem we've got is that the market knows this. So it's like, how far does it sell off before the Fed basically doesn't do what it's gonna say? I mean, we know the Fed can't do anything. It is just a game of confidence. Confidence in the Fed's words to do something, but ultimately I think the market knows they won't. So what I'm trying to say is that, does the market need to have this 15% correction to force the Fed's hand, or will it have it knowing that the Fed hand is going to be forced and it is going to do it? And then does it just continue high? But the main takeaway, the main thing that we need to understand about the stock markets is the difference between implied volatility and realized volatility. Realized volatility is very low. Implied volatility is high, and what that means is that people are paying for protection, basically downside protection. So the market on the whole is paying quite a lot for downside protection. So the market is protecting to the downside, and markets don't have big corrections to the downside whilst the market is protected from those downside corrections. The market has big downside corrections when nobody is hedging the downside risk. Everyone is euphorically bullish, and we just continue, and we're just going upwards and upwards, and that's when you get the big pullbacks. It is a very simple concept. It is so simple to understand. If everybody's bullish everything and everyone is long it, then there's no one else left to go long. No more buying can come in. The selling has to come in, and the shorter time frame traders sell, the medium sell, and then ultimately longer time frame traders then sell their positions, and there's no one to buy into it because everyone's bought, and then we get a big pullback. So it's simple. If everybody's euphorically bullishly long, then there's no one else left to buy. That's when you get your corrections. Everyone isn't bullishly euphorically long the stock markets because people are paying a lot for downside protection, which is the realized volatility. So that's realized. That's what people are paying, and that is different to what is the realized is what the actual market does, and the implied is what people are paying. So what people are paying is a lot higher than what it actually really is. So that is not a bearish scenario. Therefore, that has to change before we can have a big pullback. So realistically, we're not expecting any big pullbacks, and we can probably just extend this trend line along, and we almost definitely, I hate saying things like that, won't break this trend line here, and we will just have another bounce onwards and upwards, because again, people are paying for downside protection, and none of the big 15% pullbacks come in that scenario. And there's also 15% pullback in stock markets we're talking, and then also there is the whole question of, is the Fed even going to let it get to that? Because the Fed, everyone knows the Fed's going to step in. So does it even happen, or does that basically just invalidate that whole move now? Because the market increasingly knows the Fed is stuck. So yeah, I mean, that is what the stock markets are grappling with. So yeah, let's have a look at the stochastics for Bitcoin. If we just get the stochastics to go. Also, I was listening to a podcast the other day, and people talk about the correlation between stock markets and crypto, and basically, and it was a very interesting thing that definitely does make sense to me, is that there isn't necessarily a correlation between stock markets and crypto. There's just a correlation between liquidity and crypto. So when basically there is a lack of liquidity in markets, like there was in March, for example, then crypto does sell off as well, and it's correlated to the lack of liquidity. It's not correlated to the direction of the stock market. The direction of the stock market and the direction of the crypto market, to a certain extent, on occasion are driven by liquidity, and it is liquidity that is that Bitcoin is correlated to. So correlation, that is causing it. So correlation is not causation. The causation is liquidity. So yeah, that's just something to bear in mind. So yeah, let's look at the stochastics. 4 hour coming down, so obviously downward pressure there. 10 hour will also be coming down if it wants to load up. Yeah, 10 hours you can see coming down, losing that trend line. 12 hours still coming down, clearly lost that trend line as well. Daily diving still, 2 day coming down, 3-day, 5-day turn back down, weekly still pointing up though. So I mean, weekly and bi-weekly still pointing up. So these are the only things that really kind of show us we will potentially be in a BTFD. But yeah, like I said, we can come down to the 40-42. We can still bounce around here, and that's what I think is going to be the likely scenario. A few bear charts to be below down here, maybe a few wicks below 41. But ultimately my bias is to a sideways range, which is what I've been saying this whole time. Breaking above here is like we need to establish a high, then we'll trade sideways in that range that is established for a period of time, in much the same way that we did here, and just stair step grind the market up. At the point I think we're starting to get real momentum and actual big J hook parabolas, exponential moves. But once we get into this zone and then above the 58,500, then I think once we're up here, then we start to see less just ranging pressure, and everyone starts to get euphorically bullish, and we just catapult our way towards 100k. So yeah, there we go. That is it. This is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.